I think the banks are one of the sleeper surprises over the next few years, just the same way technology, probably the two groups that we think could really outperform the market. So it's good news. I think the performance should broaden, but as you know, a lot of tech is pure cyclical, right? There's sort of secular growth tech, and then there's sort of more cyclically oriented. And I think the cyclically oriented pieces is the area that can get some signs of life as investment spending rises, but it may take a while.
Like what?
Well, things like Oracle, IBM, HP really are much more dependent on a broader base of spending by businesses. And as you know, tech spend nominally, ex medical, has been flat for almost 15 years. I think that's really where we can start to see surprises in the next few years.
Many investors have been on the sidelines as it relates to Europe, are very cautious about coming back to that marketplace. We think it's a good time. If you are underweight there, think about getting back in. Look, the Purchasing Managers Index in Europe, a great indicator of overall activity, has been rising since November. The whole issue around Greece not really affecting that. Retail sales in Europe rising at a pace pretty much the highest level we've seen in 15 years. Economic activity looks pretty good. Loan growth is picking up. The banks are doing very well. This quarter, bank earnings in Europe are expected to be up 40% year over year. This is an environment you want to get some exposure to.
We're really not adding to European equities at this point. We think the market's gotten a bit ahead of itself as the fundamentals have failed to improve at the same pace that multiples have expanded. So valuations remain very high there. And I think, judging from Steve's report on Greece, this is a story that's going to stick with us for quite some time. And that creates an additional layer of uncertainty around European equities.
Well, I think all those things come into play, but I also think gold was massively overvalued. If you look at like oil to gold, so it's about 16 barrels of oil to an ounce of gold. That's over the last 30 years. Take $50 for a barrel of oil today, that gives you $800 for gold. We think gold's worth about $950.
Well,
fundamental nature.
Because not that long ago we were at 100 in oil, we were much higher in gold.
Yeah, and commodity traders always want to blame something like China or demand or a strike at a mine in Chile.
They have a good long list to use these days.
Well, there are, but in reality, at the end, in my opinion, it comes down to those fundamentals.